As you look at China, what do you think they are looking at the United States negotiating position? Do you think that they think we're weak, strong? Where are they playing their hand in regards to where we sit?
Well, remember, this is a place that's been around for 4,000 years. So they think of American presidents as temporary occupants of the White House, the same way Douglas MacArthur did. But in China, as early as a year, even 2 years ago, the people on the ground were really thinking this is more of a long-term conflict arising between China and the U.S. because China is growing of size to be a direct competitor to the U.S. in the world, not only trade, but also foreign policy and other things. So that's why supply chains started moving as early as a year ago. But they are not hopeful that there's going to be any immediate resolution. And the confusing remarks that come out of the White House in these tweet storms really make it much more difficult inside China for them to figure out what's going on.
And Tony, I think the markets, too, are also very confused. Obviously, we're down one day sharply. We're up the next. President Trump seems to be able to move the market very swiftly with tweets, whether or not the information is able to be verified, which seems to be a dangerous position for investors. What do you make of putting all this together and how really investors should be reacting to all of the news and headlines?
Yeah, I think it must be bewildering for them. I mean, you had some reporting, Courtney, at the top of the hour about, some of the banks and what they're telling their clients about taking risk off and being a little bit more cautionary. I think that's probably the right stance. And, we tell our clients who are asking, what they should make of it is to focus much more on what is actually happening and less on what, the president and others are saying is going to happen, because we've been down this road multiple times now with the administration indicating that things are very close, then things are off. We've heard this not just in the past few weeks, but in the past few days going into the weekend. It sounded like things were really rocky, and then who knows, maybe some accommodation yesterday. What we do know is that tariffs are still in place. New tariffs are coming on. New tariffs are coming on in December, and we know that the Chinese and the Americans are going to sit down and talk in September, regardless of whether it was a result of phone calls or not. We know that there's going to be some sit down, and so we'll see if anything concrete comes out of those discussions.
John, on Friday morning, China came out and retaliated against the United States' action with tariffs of its own on U.S. products. How damaging is that action, and what other measures should we be prepared for in terms of retaliation from China?
Well, people notice, Courtney, that the retaliation is smaller numbers than the U.S. tariffs. That's because China has less to work with on that score. The reason their exports, our exports to them are small in part is because many U.S. companies are located inside China, doing business, producing there for the growing middle class of China. So in addition to tariffs, I think much more dangerous for U.S. companies is the policies the Chinese government has toward them on the ground in China. They can cause tremendous damage to U.S. companies, so we should be careful about that. But the other damage, of course, is that as a director of companies, I think I'm on 6 or 7 boards at the moment, I cannot approve a major capital spending project with this level of uncertainty. Capital spending takes years and years. Just imagine how long it takes you. If you believe the president that, okay, get out of China, it would take a company years to do that because the capital on the ground is long-term capital. And so investment spending is just frozen in its tracks, waiting for a resolution. I think Pompeo gave the game away the other day when he said, gee, this is not likely to get resolved until the next election. What he told you is this is too delicious a political asset to let go before November 2020.
That's exactly what I was kind of thinking, Tony, as I start to think about the president's messaging. Is this possibly all done together to try to get Jay Powell to cut rates, sort of drive things lower, get his rate cut that he wants, and then he ultimately solves the deal with China and says, look, I got rates lower, I solved the deal with China going into the election? Doesn't that look good?
Well, Jay Powell has essentially told him, right, that trade uncertainty is going to factor into his decisions on rate cutting by both in terms of speed and magnitude. And so, I think on trade, the president has had this view on trade. He's been relatively protectionist and feeling that the United States has been treated unfairly, in his words, with our trading partner for decades. So it's not a new thing. And so I don't know that it would have made any difference. He was still going to be very confrontational on trade, and it is having an economic impact. John just described the kinds of decisions that firms are making, long-term investment decisions that they have to put on hold now, have to go through very costly changes in supplier lines. The administration talks about these things as though they're things that can just happen. They're very difficult and challenging and expensive to do for companies. So there's an economic impact. And so, the Fed does need to be thinking about it. And, but he wants to see low rates for a lot of reasons. I don't rule out politics involved in that. I think he would like to see, a juiced up economy going into his election. But I think some of his motivations for things like the trade fight are, long standing with him.